25,000 options contracts on SIRI. What do these unusual options mean that were placed May 26, 2:42 p.m.? Today, May 28, we are going to analyze these unusual options and show you how we are trading SIRI based on these 25,000 unusual options. So let's get right to it. June 30, 3.5 strike puts, 3.5 strike calls. We know that these are our spread. The condition is here, and we can see the prices here and the market prices that were currently when this trade was placed at that time. So when we look at the chain, the June 30s, we can see here these 25,000 on the put side are definitely open orders because there is only 4. And so this volume of 25 are opening up. And same on the call side, very large 25,000 contracts, much greater than the open interest. We believe they are selling this 3.5 strike put and then buying the 3.5 strike calls. And when you analyze this trade, you can see that this is a synthetic long trade where the price at 3.53 will be profitable if it goes up on the x-axis because everything here, the line here is above this zero profit line here on the zero on the y-axis here. Anything below is a loss, so you'll see here this is a loss once this 3.5 goes down in price. So we know this is a bullish trade. Okay, and this is essentially like owning close to 100 shares of stock. This is a delta of 99.88, so it's very similar to owning stock. And the other thing to also note is that the volatility at currently is also very high. You see here the IV percentile is 68%, and so this is a good time to be selling options, trading a base using options instead of just buying the stock. And so that is one reason to buy the to use this strategy with options instead of buying stocks. Another reason is that it costs less, but not as small, but it is still slightly less because, as you can see here, by selling this 3.5 put, it actually costs about, you have to take 3.5, you multiply by 100 because they're willing to essentially own 100 shares by selling a put. So the buying power is actually 350. Okay, so that's why it's not significantly as less as buying 100 shares of the stock, because this is, if you buy 100 shares, it's also going to be about 350. And so the reason why options were chosen as opposed to just buying the stock is because of the volatility, and there is advantages with that. We can see well, before we go there, let's just calculate real quick. This is the buying power for one contract, so multiply by 25,000 of them. This trade was $8.75 million, so a large investor putting on this trade. And so when you look at this trade, when we take a look at the Greeks, you'll see here that there is not much of a Vega effect, and there's not much of a theta decay either. And so what is the advantage of this trade? Well, the advantage is the gamma. The gamma here is at -8. And so by using options, they're able to get a gamma where this could be advantageous for the trade. Gamma is the change of delta. And so that's something that can be helpful for a trade as the price starts to move either up or down and delta starts to change. Gamma can have an effect on the speed at which delta changes. And so then this delta, for example, here you could see here that if the stock goes down 10%, delta is actually at 102 now. So it actually starts to shift. Whereas if you just buy the stock, it would stay constant at 100 for 100 shares, and this would not move the deltas. And so that is one of the reasons why to use options, because in this case, because of the gamma. Okay. And so when we look at this chart on SIRI, the question also to ask is, since this year has gone down and now it has also seems to have bottomed after earnings on April 27 here at the 3.32, has it bottomed? Is it going to stay here? That is something to to question, to wonder. Why was a bullish bet being placed now on SIRI? Comment below on what you think on SIRI. The way we are trading the this is that we took the September 15th. That's much farther out, 110 days away. And what we're doing is we're selling a 3-strike put here. You can see here our position. This is a naked put that requires $300 of buying power because it's essentially saying you're willing to buy 100 shares at $3. And then we are taking that credit of $23 and buying the 4-strike calls, which is about the same price. So we actually collect still an overall credit of 4. And so it is looks very similar to the unusual options. You'll see here it's also very bullish as well. The gamma here, though, is a little different. It is a positive gamma. It's very high also. And you'll see here our delta is a little bit smaller at 62. And so there is no loss if Sirius trades. You'll see here our break even is over here at expiration. So as long as SIRI stays above 2.97, this trade will not be at a loss. And so we'll be monitoring this and watching SIRI to see if it will go below that 2.97, which would then be a new low. So because we are expecting a bullish from the bullish movement based on these unusual options, we're not expecting it to be making any more lows, but if it does, we will be able to then take our trade off before there is any loss. And so if you're interested in following our trades, consider joining our membership on our channel. Click the join button to learn more. If you want more updates on our trade. Otherwise, we would be very interested to know what you think about SIRI. Do you think it actually has bottomed? Do you think it's going to be coming up now? What are your thoughts? All right. Take care, everybody, and smash that like button as usual.